On this episode of Through the Pines, we are covering what we have learned along our favorite moments as we celebrate our 100th episode. 100 episodes through the pines. What is going on? It only took us 6.5 years, Rex.
Unbelievable. Unbelievable. They said it wouldn't last.
We get emails, Rex. I get emails. You get emails. We get them almost every day from people who want
everybody wants to be on.
Everyone wants to be on the podcast.
Yeah.
But for some reason, we just keep bringing you and Brandon back. So I don't know.
We appreciate it. Thanks for having us.
So welcome to a financial planning podcast with down-to-earth vibes. Sasquatch is listening, and he listens every day while enjoying his first latte of the day. This is Through the Pines. Our advisors for this episode, we welcome back Rex.m.Baxter and Brandyn Smith from planwithbaxter.com. If you hear some information that just makes you excited today, which I'm sure you will, you can follow up with Rex and Brandyn at planwithbaxter.com. They are the 23, 24, 25, and 26 Forbes Best in State Wealth Management teams for Utah, the Advisor Hub's fastest growing advisors to watch under $1 billion, and the receivers of the Ameriprise Client Experience Award, which means they know what they're doing. Congratulations, Rex, on all those accolades and on 6.5 years of recording. Before we dive in here, Rex, talk us through the first episode. Like, why did you think starting a podcast in 2019 would be a good idea?
Yeah, that's a great question. So first, thanks for having us. I think before I answer that question, one of the things I've learned the most is Sasquatch is busy.
Oh, he does a lot of stuff. Yeah. And he doesn't always post it, but he's busy. Yeah.
Well, he's got some nice cars.
Yep.
Land Rovers and Porsches.
100%. Yeah.
My gosh, to be Sasquatch.
Oh, if only. If
only. Well, I think, going back to 2019, I was looking at different ways to get information out to our clients is where it really stemmed from. Mm-hmm. And podcasts had been going for a while, right? I mean, podcasts, at least as far as I recall, started gaining a lot of popularity around 2015, 2016.
So we started, we meaning the Brandyn Collective Production Company, started in 2010, and we had to tell people what a podcast was for a few years. And then you're right, about 2014, 15, everyone was like, oh yeah, are you listening to this podcast?
Right. It was the thing.
It was the thing.
Right? And so I was trying to figure out, I was getting a lot of calls from clients about, hey, my daughter or son is getting married. Do you mind having a conversation with them? Or, hey, my parents are getting older. What kinds of things should we be looking at this point? And so I was getting a lot of kind of informational types of questions. And so I thought, well, let's start a podcast, and we're just going to build a library. We're just going to build a topic-oriented library.
Yeah.
That essentially we can send out to our clients, and if they have questions on newlyweds or before you get married, what kind of conversations can you have? Or, I'm into my 50s, what should I be planning on and working on as I get closer and closer to retirement, things like that. I wanted to be able to send them a link, send them a podcast and say, hey, look, listen to this, come back to me with your questions, and then we can have a more in-depth conversation about it. And so that's where the idea came from originally. Yeah. It just so happened that we started this podcast like a month after we brought Brandyn onto the team. Mm. And we didn't bring him into the podcast immediately because he was very busy, finishing up some testing and kind of getting through, kind of getting into the full financial advisory process. And so we brought him in. I can't remember if his, maybe.
So Brandyn, you're celebrating 6.5 years as well then, just as a...
With Rex. Yeah. Because I've been in the industry for going on 16 years now.
Mm-hmm.
Celebrating might be a big word, but
definitely a celebration. Definitely a celebration.
That's pretty
but
good.
I was with another Ameriprise team for 6 years prior to Rex, but moving into Rex is more of that role. And so anyway, but yeah, it's been a good.
Yeah, it's been a great ride. And a lot of years to go. So, I was joking with somebody the other day that our team is kind of like the firm, right? The old movie,
Well, that's not good.
Tom Cruise.
I watched that movie.
Once you're in our team, you're in our team.
Did you know this, Brandon?
Kind of did, yeah. Actually.
Okay. Fair.
So, first great episode though. The first episode we did was, how to choose a financial advisor. And so a lot of our first couple of years worth of episodes we tried to make very evergreen.
They still are. So literally 99, because this is episode 100. So 99% of our episodes should be evergreen. Like you can go back and listen to the full catalog at your leisure and learn something. And we have repeated a few topics, but put a different twist on them. So I don't think we've actually done a repeat episode of really anything.
No, I don't think we have yet either. I mean, there's a lot of cross-pollination between topics to where you might hear the same thing, such as, build your emergency fund first. And you might hear that on, 20 of the 99
Oh, the themes are repeated, but
right? But we haven't repeated an actual episode.
Right, which is very good. So Brandon, you've been on 90-ish episodes, I think. So
I think I only missed 2.
Oh, wow.
Yeah, it was just a couple. It might have just been the how to choose a financial advisor and cash is king. And then I think the next one was mutual funds that we brought you into. So
yeah, and Rex is like, all right, listen to these. Is this something you'd want to be on? And I listened to him like, yeah, I don't know. You guys have a good thing going. Maybe I'll send this one out. Rex is like, well, I think you should rethink that. And okay. So
but have you enjoyed it?
I have. Yeah. It's been a lot of fun.
Yeah.
What have you learned over 6.5 years of podcasting about Rex or the financial industry or about podcasting?
Learned, what a mutual fund was.
Good. It's about time.
No, I don't.
That's an inside joke, and we don't like to refer to those. But we don't talk about that.
No, that was my very first podcast, and you opened it up and you said, Brandon, why don't you tell us what a mutual fund is? And I was just, my head went blank, right? The most basic question ever. And I was just like,
just deer in the headlights.
Yeah, I look at Rex, is like, this isn't good.
But if I recall correctly, once it popped in, you talked for like 5 minutes straight about what a mutual fund is.
I know what a mutual, but I guess so it was such a basic question that I'm like, you just didn't know where to start, right? Like, do you start from I don't know. Anyway, so that was fun. But no, I like the podcast because it gives me two things. First of all, I do a lot of the outline and the prep for these, and it really, I mean, you think most everything, and then as you start building an outline and working on something that you're like, oh well, maybe I should double check, and maybe and there's a lot of like research involved in that. That's been really a good thing and a fun thing to do, and it's fun to put things into coherent, hopefully most times, thoughts. And so it's been a lot of fun.
All right, well, we've done 90. Well, published right now are 97 episodes as we're recording this one. And so this will be the, obviously the 100th, but to give you an idea of some of the topics we have covered over the past 6.5 years, I'll just run through some of the titles and then we'll go over our favorites because we do have favorites. Okay, so the first one, Rex, like you mentioned, how to choose a financial advisor. King of cash, leave it or roll it, ways to save for college, top 10 most confusing financial terms, mastering your assets. Finish the full last word on that. So
yeah, I love, Brandon, our host, comes up with our titles of these.
Yep.
And I love how creative he is with some of these. These are fantastic.
How much debt is too much debt? The Secure Act. That feels like it was yesterday. That was in 2020. The Secure Act and its impact on your retirement. How to structure finances in your 50s. And these went totally out of order. Our decades ones. We'll talk about those in just a minute. Scary Good Money Moves. 75 years of wealth building. Tip. That's one of my favorites. 12 financial considerations in your 60s. Financial planning basics. How much do you need for retirement? How much money do you need in your 40s? Estate planning and trusts, part 1 and part 2. How to structure money in retirement, decade of your 70s. How to build a financial portfolio, bear market basics, building a money base, love and money, how to structure finances as a couple, how to stick to a budget. We've done a couple of those too.
That was one of
variations.
my favorites, though. The love and money was one of the first marriage ones that we did. And I really liked that. Some of these are really fun just because Brandyn and I, although we see eye to eye on a lot of really important core areas, especially involving investments and things like that, there's some areas where we don't always see eye to eye. And in this case, there's a couple of those that really stand out to me that were really fun just to kind of see how a millennial might misread different ways to understand concepts.
Those millennials, I tell you.
Speaking of millennials.
Yeah. We had some as simple as how to stick to a budget, how to put money into an IRA, how to take money out of an IRA, the ultimate 401k guide, the ultimate financial plan, real estate as part of your financial plan, how to start. I think we had a special guest on that one as well. Business as a financial plan, like starting a business, managing money in your 30s, money mistakes financial advisors have seen over the years. Don't make them. Financial planning in your 80s. Yes, more people are living and planning in their 80s. Crush it financially in 2023. Prepare for long-term care. Invest and what we can learn. How the wealthy invest and what we can learn. Bank failures and keeping your money safe. So you'll notice that some of these are around what's going on in the world, I guess.
Yeah, I mean, there were bank failures had kind of spiked again a little bit back then.
Yeah. We have the two banks really quick.
Yeah, the one on the East Coast and the West Coast.
Yeah, Signature and
do you remember? I'm not sure I can recall the name.
Silicon.
Top of my head. Yeah,
Silicon Valley Bank.
Is that what it was? Okay,
wasn't it? I think so.
Probably. So, but they had really spiked up during the financial crisis of 2008. And every year, there's maybe, I don't remember the number, but maybe 30 or so, a number of banks go under every single year in this country.
Yeah.
And those were just some bigger ones that kind of brought it to light that maybe we should re-talk about FDIC limits and kind of how that works. And since then, they've revamped the FDIC limits and how that works with beneficiaries to where now you can protect quite a bit through the FDIC system. So.
Okay, transitioning into retirement, a perspective from a retired financial advisor, and we'll talk about that here in a minute too. The Secure Act, how new retirement rules may impact you. Again, policy, happens over 6 years, so we address those. Barriers to financial planning. Buying and selling a business with Michael Westover. That was a good one. Should you manage your own money? Pros and cons. Market update. Are we heading into a recession? That was June 21st, 2023. What happened after that?
We did not.
I
actually read that and then thought, it's fun to kind of see this.
Yeah, interest rates had gone up like 12 times during 2022 due to inflation hitting 9%. And a lot of times after you have inflation spiking like that, it throws an economy into a recession. And so we were just talking about, will it happen? Won't it happen? And we figured it'd be skinny, it'd be close. And it ended up.
It hit some parameters on paper, but it was never officially called a recession, right? Is that what happened?
Yeah, I mean, 2022 was a rough year in the market. It was down, 20-ish%. But then 23 it recovered basically all the way. And then 24, 25 were great years.
Okay. Market update. That was the one heading into a recession. Okay. So 9 questions to ask when considering changing financial advisors. What to do with your money during a recession. We were still concerned about that. Through the Pines episode 44 was how to avoid financial scams. That's a good one. The accumulation phase of wealth building. And then money mind games, which we did have a couple of those as well. And then let's go ahead into the newer ones. The newer ones meaning November 23.
The scams are good, right? Just because
they're good scams and they're good episodes.
Good to be aware of.
It's good to be aware of because they're getting more and more intricate. And so, matter of fact, this morning I saw on the state of Utah site that one of the scams that's happening right now is they're actually mailing out notices to people's addresses saying that they owe on some, a ticket or something, some kind of court case or something like that with instructions of where to send the money, different ways to send it by check, by cash.
I got a text one of those yesterday.
Yeah. And so it's right now that's really prevalent in the state of Utah, apparently, as far as, and it's interesting because they always say, oh yeah, we would never call you, right? We would always send it to you in the mail. Well, now you're getting the scam in the mail. And
I have wondered that, right? And didn't ever want to say anything, but like, okay, well, everybody hears that. Why not just start mailing stuff? And I've seen stuff even from Social Security that looks really, really close, but I just, you can't tell. And so the answer to that is you never call any phone number you see on the letter, right? But you find the organization that is claiming to send you something, and then you go find that exact organization's real website, independent of the letter or any correspondence from them, and you contact them directly and figure out whether there is an issue or not.
Yeah. A lot of scams right now, though.
Do this to build generational wealth. How to sell your business, the pre-retirement phase of life, 5 to 10 years before retirement, what wealth means to you, how to set your 2024 financial goals, retirement phase of life, how to leave a legacy, financial portfolio basics, 5 core values of smart money kids, which is a fun one, teaching them early, and then the follow-up, why are these financial subjects not taught in school? Receiving an inheritance, now what? ? Financial risk management, why you need a trust, 2024 financial trends and what hasn't changed. And then our second one that's kind of on behavioral finance and how our subconscious controls our money. And Rex, we'll talk about these because I know those are some of your favorites. How to invest, the basics. So every once in a while we do go back to the basics. We do a couple of these. It's like, okay, like these are things that are themes throughout, and so we just recover them. What to do with excess cash, 7 most debated financial topics, who's right. Net worth is the most important number in your financial life. What you need to know about charitable giving, most overlooked financial planning topics, love and money, how to structure cash in your marriage. We've done a couple of these relationship ones. Income, because it's important, Rex.
And there's
people tend to be in relationships at times. So,
and there's a lot of controversy on how different relationships handle it, and so when we see that all the time, as far as where we almost have to wear a counselor hat and sit there and mediate. Through marriage counseling.
And you don't get a heads up on that before you go into the meeting, I'm sure.
Typically body language tells the story as they walk in. So
oh man, that's not good, dude. You're like, oh, this is going to be a rough one today.
Oh, this feels tense already.
But if you can solve it, it feels really good, right? If you can help work through it with them. And a lot of times you can, because we're an independent party that I'm not trying to make one person right or wrong, right? We're trying to find some sort of unity, something they can get around that will actually work financially. And so it's not the end of the world. Like sometimes it's a little tense.
But we can bridge the gap typically pretty well. Yeah. And it's nice because we can take a step back and reframe the conversation.
Right.
And actually take a minute to hear what each of them is saying and where they're coming from. So that then we can figure out kind of where that disconnect is.
Yeah, because usually there's some truth in both sides. Right?
Yeah, absolutely.
And it's just figuring out, all right, what's important to you and what's important to you and how do we make this work?
Yeah.
Income during retirement, biggest reasons people fail to plan financially, unveiling insurance secrets, save big or risk it all. Mastering your money in 2025, budgeting, investing, and winning with market trends. How to create a winning business plan. Why you shouldn't panic during a chaotic market. Again, I think we were responding to something, a market changing, going up and down. This was April of 2025, so it was about a year ago.
Yeah, a year ago, the market dropped just precipitously because of the tariffs that Trump had rolled out.
That's right. Yep.
And so they dropped. I want to say it was, maybe was it 20% in 2 days or something, or 10%.
Yeah,
it was a lot in like a 2-day period,
and
it bounced back very rapidly. But the point being that the market drops very quickly before you can react a lot of times, and the unfortunate thing is a lot of people react and
by the time you react, it is a reactionary and things have changed.
Right.
Okay. Yeah. Caring financially for aging parents. That's a great one. Great episode, which I didn't put on my favorites, but I probably should have. Preparing for estate settlement, mastering debt, the good, bad, and the ugly, building wealth with an IRA, with a Roth IRA, why save and invest? We're just going to die anyway. Like, what's the point of all of this?
That was kind of a fun one, especially because you definitely took kind of the devil's advocate on that one.
What are we doing?
What are we doing? I'm going to die. I'm just going to die broke. Spend it
all, man.
And anybody who has saved substantial amounts has had that thought cross their mind, right? Like, I'm putting away a lot of money, and am I ever really going to see this?
And what's the point?
Right.
And what are we doing? Yeah, that's a good one. The 5 money questions you must ask your partner. See, these are important. Millennials Guide to Financial Freedom. Oh boy,
that was Brandon.
I'm Brandon on that one. Financially supporting your adult kids. That got a lot of traction. That was one of our most downloaded podcasts ever. Yes, because that is a question that parents are like, am I doing this correctly? Should I be paying for my kids' bills or car or insurance, or what's going on here? So,
and because there's not a guidebook, and we're going through a cycle in history where there's a lot of boomerang kids, right? Where they've left and they're coming back and
have one.
And a lot of the baby boomer generation, has taken that approach of, I want to help my kids.
Right. There was for years, and I don't know how long, but it was like, hey, you're 18, you're out of the house. Yeah. And financially, it was doable. It was an option. You could do some things and do that. But right now, with the cost of living and things at 18, I'm like, I don't know. There's no way.
Right.
And so things have changed a little bit. And like, how do we structure payments and help our kids?
There's a way. It's just more painful, right?
It's more painful. Yeah.
you just have to, work harder and longer and be dedicated towards it. There's always a way. It's just, are you willing to pay the price to do it?
I think it's a topic that people want to help their kids, but they don't want to hurt their kids by helping them. And like literally yesterday, my oldest daughter runs up and is like, Dad, can you Venmo me $20 for the mall? I'll pay you back tomorrow. I'm going to make some money. I'll pay you back. And I was like, you can't do this. No, like, this is not okay. Like, this is the start of it. And I went through a whole thing.
Oh, to be
I did.
Yeah.
Kids.
You and my wife are not the same, because it's like a pretty much, what do you need? When that's why you have the conversation. So that was episode 82, financially supporting your adult kids when you should. Meaning, because you're talking kids, but when they're 18 or out of the house, it's different. Building wealth in retirement was another one. The ultimate financial checklist. How health and longevity matters for wealth building. Risks that threaten and destroy wealth. Steps to create financial independence. AI versus certified financial planners, and who comes out on top. And I'm telling you, that was in November, and it changes monthly, like the updates
we come out on top every time.
I don't
think that changes.
AI changes monthly. Yeah. And so go back and listen to that, because that's a good one. Your year-end financial review that was closing out 2025. We had the Hartford on for 2 episodes, which was fantastic. So we'll talk about that. Trump accounts and how to save for your kids' future. The 2026 financial landscape and how to navigate that. Questions financial advisors love versus hate. That one was a good one. And reasons you need a financial advisor in 2026 before it's too late. Bum, bum, bum. Money fads and bubbles and fundamentals. Brandon, I remember that was yours. And 5 ways to build and destroy wealth in 2026. So, and then we have some that we haven't published yet, and we are in episode 100. So congratulations again. That was a haul. That was a haul, dude.
Man, you ran through those quick, though.
Yeah, that was all 100.
That was impressive. Yeah.
All 100 of those.
That was amazing.
All right, so we do have we've gleaned some introspective, some knowledge from some of our favorites. And so, Rex, Brandon, we'll start with you guys. Episode 84, the ultimate financial checklist: insurance, emergency funds, debt, estate planning, saving strategies, retirement, financial goals and dreams. Brandon, what'd you like about that one?
Yeah, this one was kind of my baby. I wanted it. I wanted a podcast to where I could say, hey, you know what? If you've got literally 45 minutes, let me tell you the most important things in order, in my opinion, in order of how they should be taken care of, and really a good, independent view on insurances and emergency fund and debt and estate planning, because it seems like so often we're just being sold stuff, right? Whether it's insurance or whether it's buying a car and debt and all these things. Like there's so many conflicts of interest. I just want a really good high level, like, hey, this is a really healthy checklist to take you kind of A to Z on what you need to really be whole financially.
Mm-hmm. Yeah.
I really like that episode because I think it was the week before I received a call from a friend of ours that's maybe 50 or something like that. And I hadn't talked to him for years and years, but he called and he's like, Rex, I just don't know where to start. Like I've been going on and getting things done and things like that. And I've got, insurance through my employer and different things like that, but I just don't even know where to start.
Yeah.
And I think that's a common thing.
Rex
out
is
there.
like, I have 99 episodes for you to listen to.
Start on one.
Start on episode 1 because you just made the right decision. You called the right financial advisor.
Yep. Oh, that's funny.
Yeah, but I think that's a common question out there that people have, right?
Oh, 100%, because you can Google, you can AI search, but then it's like, I don't know who to trust or what to believe or whatever. Like where do I start? So that's a good. Yeah.
Yeah. And obviously it's not comprehensive, right? There's always going to be a lot of depth, but I think you can listen to that podcast and really pinpoint if you have any blaring gaps in your plan. Like, whoa, I didn't think about that for my, home and auto insurance, or I didn't think about that for like it covers most of the big things that sometimes get missed.
Yeah. Then we had a couple behavioral podcasts. Episode 46 was Money Mind Games. Emotions and money, cognitive biases in wealth management, behavioral financial struggles, long-term versus short-term thinking, and the role of a good financial advisor, practical tips for money mind games. Rex, that's your baby.
That was my baby.
That was yours?
I love that. I was so excited. I built out the whole thing and then I got like crazy sick, like terrible case of the man flu. And I was like in bed asleep like for days.
Yeah.
And I missed it, and I'm still kind of a little bit bitter that I missed it. And Rex was nice.
The man flu, he had the sniffles. You guys
did not have it.
Flu's bad, dude.
When I get sick, I'm dead. Like I'm dying. Like it was a good run.
Yeah.
Like I will lay there in bed, like so thirsty with a drink of water, and I can't reach out to get it. Like I'm so, I don't know. It's pathetic, but. Yeah, no, I've thought about wanting to re-record that one because, man, I love that topic. But
yeah, it's, when I got into the business back, almost 30 years ago now, I didn't think I would like the psychology and the behavioral finance side of this business as much as I really have embraced it.
Yeah.
Coming from a family where both my parents were school counselors, there's obviously a lot of that kind of happens in a family, just kind of organically and naturally in our family. And it was something I was never very interested in participating in or being involved in. But as my careers continue to progress, I love the psychology of money. I love the behavioral finance of money. And I feel like the more I progress, the more I feel like that's really what people need, is they need more of the help and the hand-holding and the guiding through those financial decisions, even more so than should I buy stock A or stock B. And so I feel like that's almost becoming secondary to some extent in the business. I
heard a news story this morning of, it was a job that AI is taking over, and it was a random job, sommelier, right? So providing the right wine for your dinner.
Oh, pairings,
yeah. And then the industry responded with, well, it can, yes and no, always yes and no. Yes, it helps us because we can kind of feed it the information, the ingredients, let's say in the dinner you're about to have, and it can suggest the wines. But what it can't do is read the room. It'll never be able to read the room. It's hard to understand who the clients are sitting at the table, right? And that's what you guys do. You read the room, and it's the psychological. Like, you didn't go to school for that, Rex?
No, there's not. I mean, so interesting. In school, they do have a behavioral finance class. They do have
that's good. Yeah.
Some psychology courses that you take in order to have a finance degree.
When I took my CFP classes, they had the whole section on it. which I think is good.
That's good.
Now they have entire designations around behavioral finance in our industry.
Because we found we can tell you all the right answers, but sometimes that isn't enough, right? You need to modify the behavior and the fundamental thinking behind it in order to get all the right answers implemented.
Yeah. And when we talk about AI, that's one thing that's like, dude, the psychology is, and sitting down with someone one-on-one is something that's going to need you.
And I mean, human. AI, as great as it is, and it's going to be an amazing enhancer and complement to our business. It still doesn't have the humanity of it. It still doesn't have the ability to read the room. It doesn't have the ability to read body language. It doesn't have the ability to dig in and ask the questions that you don't know need to be asked yet. Yeah.
I'm hoping the Tesla bots will, not for your sake, but for just in general. Like,
are you excited for bots? Are you excited for robots and to have
100%
one in the home, cleaning the house?
Okay, when did you see your first one in a home? Not in person, but like in the movies.
The Jetsons.
Okay, that did not come to my mind. No, mine was Rocky.
Okay.
Because Rocky he got rich. And what did he do? He bought a freaking bot. And that was in the 80s.
Oh, yeah.
That was a long time ago.
That was a long time ago.
So,
early 80s.
Early 80s. And then, of course, Star Wars. But it was, Star Wars was 70s. But that's not like, that's a whole universe and not in your home. And so, but Rocky's was like in his
that was Rocky 3, home. Right?
Well,
I think so. Mr. T. Anyway.
Anyway, I thought it was, okay. So maybe this one was yours, Rex, episode 61, behavioral finance, mental accounting, familiarity bias, herd behavior, emotional gap, self-attribution, confirmation bias, and loss aversion. Oh, and anchoring.
Yeah, Brandon put this one together too. And
Rex, do you do anything on these?
I talk and I pontificate, and
I was trying to credit you, and I thought that was yours.
No, but it was one of my favorites.
Yeah,
absolutely, it was one of my favorites, and so I think you're pulling out the favorites.
And Rex and I talk about it. We kind of bounce the ideas back and forth. And
we do.
Rex comes up with the ideas as you get stuck with putting them all together.
Brandon, that's a great idea. Put this together, would you?
Or hey, why don't you think about that one again?
There's a little bit of that on occasions. Let's tweak that one.
That's called a team. I like that.
That's teamwork.
That's teamwork. Makes the dream work. So another behavioral one.
That one I love because it really gets into the most common psychological pitfalls that people fall into, such as herd mentality and those different kinds of things that we see people chasing all the time. And a lot of times they're just not self-aware enough to know that that's what trap they're falling into.
Yeah.
And so I really like that episode.
Yeah, most of us aren't self-aware enough that we are actually following a lot of these biases because they're very innate in us to follow those. And we actually use those as rationalization for our decisions. But then by studying and understanding those things, you can actually catch yourself and be like, whoa, that's not what like I need to correct the way I'm thinking about this, because they can lead to a lot of losses in the market, if you follow them too far.
Yeah.
Yep. All right. So we did decades completely out of order. So
that was not my idea. I was like, are we sure we want to start with the 50s? And I'll jump in.
That was my idea. So the reason we were doing them out of order is I was like, well, who do I want to target the most? Who do I feel like, is our target market? Who are we wanting to kind of gear these to originally?
Okay.
And so I kind of started with those that are around the retirement years, the 50s, 60s, and 70s, to where they're going through major financial life changes.
Mm-hmm.
And so we started with kind of that area. And then we were like, well, heck, we've already got the 50s, 60s, 70s. Let's jump down to the 20s.
Yeah.
Or let's jump up to the 40s, or and so
episode 31 was the 80s.
Right.
So, so it spans episode 9 to 31, not all of them in a row, obviously, but episode, well, if you go in, Rex, why is it important to have a specific episode for someone in a specific decade, like someone in their 20s versus someone in their 30s versus someone in their 40s, et cetera?
Well, I think each decade presents unique challenges financially. And I think there's certain things in each decade that you should be focused on. In your 20s, you're typically getting through college, and so you got to be aware of school debt. You need to, typically that's a great time if you haven't started saving before your 20s. You absolutely want to start saving in your 20s because that's when you have the most time value impact on your investing. Typically you're getting married kind of in the later part of that decade. And so you need to make sure, do we have our whatever insurances we need in place, but don't over insure because we don't have a lot of responsibility typically in our 20s, but in our 30s, we have a lot of responsibilities. Mm-hmm. And so we want to make sure that we're that we do have all the disability insurance and life insurances. And by then, a lot of times we have kids. And so we might want to make sure that we have the wills and the trusts and things like that. And so each decade presents its own set of unique items that you want to be aware of and take care of. And so I think if you're approaching a new decade, you should go and listen to that new decade's, podcast.
And so to maybe make it easier for you to find, if you're in your teens and 20s, it's episode 20. That one relates.
That's what we should have done. Yeah. What were we thinking? Yeah. Episode 20 for the 20s, 30 for the 30s, 40 for the 40s. It was
so close because episode 29 was 30s. Right on the edge.
So is today the centurions? Are we going to do it? Oh, if you hit 100, this is what you should be thinking of when you're 100. Spend. I'm just joking.
That's a good point. Yeah. So 29 was 30, your 30s. Episode 14 was your 40s.
Oh, okay.
There's 14 and 4 in there. Episode 9 was 50s. I don't know. That has nothing to do with anything. So that's just, it is what it is. Episode 12 is your 60s. And episode 17, 70s. Episode 31, 80s. And that takes you through the decades. And we have not done a 90s or a 100s, Rex.
Well, we did 80s plus.
That's true. It is 80s plus. It does say 80s plus. So before we dive into my favorite episodes and what we have learned from what I've learned from producing 99 episodes of Through the Pines, I think we need some more numbers, Brandon.
Yeah, we do.
And I have a gift for y'all here today.
How did we come up with some more numbers? Do you remember before we get to your gift?
No, because we started with quote of the week.
Oh, that's right.
Quote of the podcast.
Quote of the podcast.
Quote of the podcast, quote of the episode. And then I was like, I always say quote of the week. And I kept screwing that up. I'm like, we got to fix this. We got to change it. We need a new thing that we do on every podcast. And, I don't know how we got to an interesting stat. We got to Brandon, was that your idea? Just coming up with an interesting stat? And then once we came up with the idea, we had to call it something and theme it with the show.
No, Rex had that.
No, I had that beforehand.
Yeah. Okay.
And I thought, well, it might just be interesting to tie a stat in to whatever the podcast topic was. And so my thought was, if it was on real estate.
They don't relate at all anymore.
I know, now there's no tie. It's more over time. But that was my original thought. Was if our podcast was on like real estate, we'd have some sort of interesting real estate stat tied into it.
I like that they're completely random.
I do too.
You totally are.
Well, and I thought, Rex, when you told me about it, it was just some random statistic. Like it could be sports, it could be like all over. And I've always kind of drifted towards more economic, but
yeah, because we did some sports one. We did, I think we had talked about the youngest recruit during one of the early podcasts as far as, and what their recruiting deal was. It was like a 7th grader getting recruited into a college basketball team, I think it was, or football. Yeah. Anyhow, it was one of those. And so, I like sports. I like sports stats. And so we tied in a couple here and
more sports stats. That's a hint, I think.
No, it's not a hint. You do you. You do you, boo.
All right. Well, before we jump into these, I have some s'mores. Pop-Tarts to hand out. So there's 2 there. So you split it up and we can open up. We each get our own s'mores Pop-Tart on the day.
Man,
this may be, if you're fasting or if you're going carb free, this is not going to be good because these are.
I heard gifts were all calorie free.
That's true. That's true.
These are good.
S'mores,
like
Pop-Tarts.
Oh my gosh.
That's delicious.
I love s'mores.
All right, Brandon.
S'mores are great.
Yeah. So, this is by Bespoke, and this is in the midterm election years, and this is going clear back to 1945. The S&P 500 usually gets a little bit more volatile, right? It goes up and down. On average, what do you think it falls in a midterm election year, right? Because you had some volatility in a midterm election year, peak to trough. So from its highest point to its lowest point during that
percentage?
year. Yeah. What percentage do you think it drops on average?
It drops. Oh,
I'm going to say from peak to trough or just
peak to trough.
Just okay.
Intra year during that year.
I'm going to say 17%.
Oh, that's a really good guess.
Okay. I was low then. I was thinking 12.
Yeah.
Yeah.
It is actually 18%.
Oh.
Is your average intra-year drop.
Wow.
Which sounds like a lot until you realize the average drop of the S&P 500 in any given year is actually about 14.1%. Which usually catches people by surprise. Like, whoa, what do you mean? Like, because and you think about it, man, if the market drops 5% or 10%, the news loses its mind, right?
Yeah.
Like, it's like this, but as an advisor, right, we're so in it, we actually see it, happen consistently and then you see the stats and you look at things like that and you're like, okay, yeah, it drops 14%. During a midterm, right, it drops 18%. So a little bit more, which makes sense, just because you have more uncertainty. However, I think it's also important to realize that market doesn't like uncertainty. And during election years, midterm and others, as that uncertainty unwinds and kind of everyone figures out what's going to happen, you usually see a pretty decent return during the year. The problem though is sometimes it doesn't, right? There's plenty of times that it doesn't drop. And so, if it doesn't drop and you're like, I'm just going to sit on the sideline, wait till it drops 18%, then I'm going to jump in. That sounds great, but it just doesn't always work. And a lot of times you'll set, you might be on the sideline and it's dropped 16%. You're like, nope, I'm waiting for 18 and thump, like takes off, right? And so it's really hard to time that. And the answer always comes back to, all right, we need a well-balanced, diversified portfolio that's prepared for a recession if it comes, and prepared to take advantage of the market swings up when they happen.
Yeah. Rex, am I reading this in my mind correctly?
Well, let me read your mind.
Yep. Let me give you so it feels like, and I kind of came up with a solution in my head before I came up with while I was thinking of the question, I was like, maybe it's this. But about 7 years ago or so, when the Dow would either increase or lose 100 points, the financial media would lose their mind. Like 100 points, 100 point day, blah, blah, blah. And now, seems like recently in the last 3 years or whatever, we see 400 in the Dow, 400 point swings often, like 1,000. We've seen a few 1,000-point swings, right? So now I'm thinking, okay, well, are we just seeing more swings? Is there more volatility day to day? Or is it just because 400 is like percentage-wise is maybe the 100 of 7 years ago or something?
Yeah, I'm not sure about the 7-year time frame, but I think certainly we're seeing more volatility this year, and part of that's the conflict with Iran. Part of that is midterm election year and some uncertainty on interest rates and things like that, the economic environment we're in. But I do think over time, it focuses more on a percentage of where the Dow is at. If the Dow's at 40,000 and you have a 400-point day, right, that's a smaller percentage, right? Mm-hmm. You're talking 1% move on something like that. Whereas when the Dow was 10,000 and you had a 100-point move, it's the 1%. Mm-hmm. And so I think that's become a little more realistic as far as people reacting that way, more on percentage based as opposed to point based.
Yeah.
But I think, once the Dow kind of passed that 10,000 mark, I think it started, there was a generation there that wasn't used to seeing, 1% moves or 2 or 3% moves to where it's 100, 200, 300. And so you'd get big headlines around those point moves at that point. And then when the financial crisis hit in 2008 and 9, you had, some big days where it might be a 1,500-point move. Wow. And that was an enormous move on a 20,000 Dow around that time frame. And so that really got some headlines there. But now for, 40,000 Dow with a 400-point move, you're still talking, 1% and in that range. And that's normal volatility. That shouldn't shock anybody to have, a 400-point day up or down, or a 300-point day or a 500-point day. Right. if you start to get to 800 to 1200, you start getting 2, 3, 4% days. Those are abnormal. They happen, and they will continue to happen during your lifetime, but they aren't happening. They shouldn't be happening all that frequently. Things like that normally would happen maybe every 5 years, or kind of on that kind of a cycle.
But that's the issue, right? Is like that just doesn't catch that amazing of a headline when you're driving home from work and they're like, S&P 500 slid, or Dow is slid 800 points, like that sounds so much like that sounds dramatic, right?
Yeah.
But if you're just like Dow fell 2%, it's like,
okay.
Is this really the end of the world, right? For the stock market to fall 2%? Not really, right?
Well, the media loves sensationalism.
They do,
right?
They
that's
do,
and so that's what they're going to focus on, is whatever sounds more dramatic is what the headline's going to be.
Right. Mm-hmm. Yeah, you got. In my opinion, I follow the percentages. That's what in my head, as I'm looking at things and reading and processing and talking with clients, is percentage basis. Yeah. But I get that some guys, especially the old timers, love their points. But to your point, Brandon, it makes it confusing, right? Because when they see, they're like, man, another 400 point day, that's wild. And it's like, well, it was wild when it was 400 points,
especially if you're not watching regularly and frequently.
Right, but now it's not. And it's the same movement of percentage points in your portfolio. It's just higher points.
Yeah. And when do you guys get the call? Is it a certain percentage move in a day, or is it a bad week, a trend lined sort of situation where they're like, I think we need to do something here?
If it's hitting the news regularly for a couple of days in a row, and it's big, then we'll start getting some phone calls. Mm-hmm. And so if all of a sudden, people will take typically one of two approaches. Either, they'll see the headlines and they'll shut down and won't look at their accounts at all for like 3 to 6 months.
I love that approach.
Right?
Yeah. That's probably most people.
And that's the mass. That's definitely the masses. And then you get the others that are like, oh my gosh, I have to look. I can't stand it, And so it's like burning a hole in my pocket. I got to go look. And they see that their portfolio might be down, if the market's down 10%, they may be down 5%. And so then they're fearful of, am I going to be down 10 or 20? Is this one of those times I should sell and try and get back in? And they try and second guess it. And that's typically a loser's game to do that typically.
Do you see like website increases on your back end? Yeah, absolutely.
You see more website hits, especially if that spans a end of month to where a statement has been generated. Mm-hmm. Right? A lot of people get their statements electronically, or they get an email saying, hey, your statement's available online. But we still have a good amount of people that still get physical statements. And so when their statements show up, if they don't fall in that first camp where they throw it away immediately without opening it, right? And they open it up and they see the graph, on that front page typically that has dropped, then that's a shock because they may not have been paying attention to the news.
Right. So we make sure our clients know they can call us at any time, right? Like, and I tell them this all the time, like, hey, if this is like scary, if you're nervous, if this is making you uncomfortable, like, please reach out. Let's have a conversation. Let's talk through, the pros and cons, what's happening, what we're nervous about, what we're comfortable with. But even with that said, I'm always surprised at how few phone calls we get. We get very few phone calls. And I think that comes back to the financial planning side, where we're working through with clients saying, hey, you know what? I don't think we have a recession around the corner, but you never know. And if we do have one, this is how we get through it. And so I think our clients really do understand, like, hey, there's a plan. Even though we're seeing some volatility, we're going to be all right. And so we don't get that many calls. But I do want clients to know, if you're nervous, if you're not feeling comfortable, please call, right? Let's talk through it.
And for non-clients that are out there listening, if you're not a client and you're nervous, absolutely, we can still be a resource to
you. Right, because that's when the mistakes are made, is when you're nervous. And so it's a great time to talk.
So, no, I think we do a great job of couching the range of returns on it for a certain risk portfolio, is saying, hey, look, for the amount of risk you're taking, in a normal year, if the market's down X, I would anticipate you to be down Y, right? In, once every 5 years, if the market takes this kind of a dip, you should have this kind of experience. And in 10 years, a 10-year market dip might look like X. And again, your portfolio would be Y. And so are you comfortable with that, knowing that we're targeting long-term return of 6, 7, 8, 9, 10%, whatever the return is that we're targeting, and knowing that that's what we're targeting. But even as we're targeting that return, we're still going to have, these experiences along the way.
Mm-hmm.
And I think we do a really good job of doing that in percentage terms and dollar terms, so that they know going into it kind of what to expect as we hit volatility, because you never know when that's going to happen.
Yeah. All right. Well, my favorite, one of my favorite episodes was our first episode, and oh my gosh, the description's hilarious. And so it was episode 1, how to choose a financial advisor. And the description is this: in this inaugural episode of Through the Pines, we chat about how to choose a financial advisor, include multiple financial examples using our Sasquatch friends, give some very interesting financial numbers, and a money quote of the week. I'm like, that's not even a correct sentence. It's not grammatically correct. I don't know who our Sasquatch friends are. I don't know what's going on here. But that's how we started. I think we've improved a little.
We've improved a little bit on that, but it did make me reminisce because I read through that same thing, which is funny. And it made me reminisce about, how did we come up with the name of Through the Pines?
Yeah.
And how did we and why did we loop Sasquatch in as our unofficial mascot, into Through the Pines?
Yeah.
And so I think that's been fun. I think we came up with the name Through the Pines because for Brandyn Collective, one of their premier podcasts that they do was Ogden Outdoor Adventures at the time.
Yep. We're arts and outdoor based.
Yeah. And so it's outdoor based and arts based inside of Ogden, Utah, Weber County, And so I wanted something that tied into the Brandyn Collective's overall theme where you're hosting it. And so, talking about Through the Pines, sometimes we're looking at pine needles and you're paying too much attention to the details and you're too close to the forest. And so there's just a lot of analogies that we could tie in. And so that felt pretty good to come up with the name. And then on Sasquatch, I'm not sure, we've teased, especially really hard, those first 10 or 15 episodes as far as that we would share kind of our history.
I don't know.
Sasquatch.
I'm not sure
we've ever shared why or what our Sasquatch experience was.
Do you know what it is?
Yeah.
Okay.
Yeah. You guys told me.
Did we share it on the podcast?
I don't know if we shared it on the podcast.
I don't remember if we've ever shared it on the podcast.
Rex, you can take the lead on this. This was not good.
Oh, this was great. This was great.
Oh.
So Brandyn and I were in high school. So here you go. So you had to listen to the first 100 episodes to get this story. Imagine what kind of story you're going to get at episode 200. But for now,
I'm like, I think this is the one. So
this is the one. So we were in high school and we rock climbed a lot. And I'm not saying grades suffered or social life suffered. I'm not saying any of those
100% did on my end.
I think we need to post Rex's picture. That is an impressive picture.
That's true. And both of us actually.
Yeah, we've got some good climbing pictures, and so we were fit in the day.
I think we weighed like $130 or something. Like it was so thin.
123.
Oh my gosh. I was heavier than that. But
So I was a skinny high schooler, and which helped for climbing. So we decided for a weekend to go up to City of the Rocks, which is just over the Idaho border, in northwestern corner of Utah.
Strange place.
Great rock formations. Fantastic for climbing. Very few facilities around the area. And so, but we were camping up there and we'd been climbing all day. We went and set up camp, and we'd eaten, we'd had our s'mores by the campfire, which is kind of where the s'mores came from. And we kind of bedded down for the night, and at about, it must have been midnight or 1, I can't remember the exact time, but it was right after midnight. We both sat straight up. As all of a sudden we heard just a ruckus outside the tent. I mean, it was loud. Something was moving hard around our tent.
By our fire pit.
Right by our fire pit on there. And I mean, it was breaking limb. I mean, you could hear like limbs being broken and all those things. And so we sat straight up and we're like, what the heck is that? And then you could actually hear some heavy breathing kind of things. Yeah.
And we had gone through like, okay, listen, this isn't our first time outside. we've camped. And we're like, what the hell animals? What kind of animal would that be? Like, what is that? What is that? Like, that's not like
it's not
a raccoon
moose or elk country, right?
Because you drive in there.
You could have elk.
You could have deer, but probably not moose or elk. It's not forestry at all.
Right.
And so, but it sounded significantly bigger than any, deer or anything like that. And so we definitely had ourselves convinced that we were being visited by Sasquatch, that he was checking out our campsite.
But good news, we had weapons.
Even brushed up against the tent.
Well, he stepped, yes. And so what happened was it hit the bottom of the tent on my side.
Yeah.
And that's when I'm like, oh, this is not okay. And
that is weird for an animal to touch a tent, though.
Turns out he didn't touch the tent. Sasquatch, did not touch the tent. But there was a root of that was like you push on it above the tent, so that's how close it was. Right. It pops up on the other side and hits the tent. But we had, this was a whole ordeal. The only kind of weapon I had was, I think Rex had a fishing knife in his Jeep, which we were not in. We were in the tent, and I had like a pocket knife in my the tent. And I'm like, what am I going to kill this thing with my little pocket knife? Like this is not a good idea. But we ended up getting our Jeeps, running to our Jeeps. I had my girlfriend with me. We ran to the Jeeps at the time. We shined a light up in camp to see if we could see the animal. Rex, I remember Rex walking up to camp with his fishing knife in his hand like he was going to kung fu this thing.
Right? I was going to have some dinner.
Yeah. And this lasted all night. I remember seeing the light in the horizon coming lighter because we were dealing with this Sasquatch character all night.
What do you mean you were dealing with it all night? Like you went back in the tent
making noises.
It kept making noises around the camp.
Why didn't you just like sleep in the Jeep?
We were
with our tops off with the Jeep. I'd rather be in the tent.
Yeah, tops are off in the Jeep. We both had tops off in the Jeep. That's tops off on our bodies. Tops off in the Jeep.
It was a topless camp, right?
Yeah. But we ended up. I remember Rex was like, "I'm going to bed. Like I've had enough. I'm going to bed."
Knowing Rex, that checks out.
I can sleep through that. Yeah. I can sleep through that.
What's worse, dying or not getting a good night's sleep? I'm going to bed.
Yeah, I was still sitting up. My girlfriend had kind of like nodded off or whatever. We were all in sleeping bags in the same tent. I could hear Rex start snoring. I'm like, well, he's out. Like, it's not bothering him anymore. I guess but I remember seeing the sun come, and he knew that was our. Well, the story goes when Rex was heading up the hill with his fishing knife, ready to murder the thing, he turned to me and said, "Run." And we ran. We ran down the hill, jumped in the Jeeps, took off in the Jeep, and
you drove away.
We did. We drove to Bear Lake.
Drove away. And Rex, I was like, what did you see? What did you see? And Rex is like, I don't know, but it was bipedal.
That sounds just like that, Rex.
Two things go through my head. One, like,
what high schooler used the words bipedal?
Who the hell says bipedal? Like what the kind of, and if it is bipedal, well, obviously it's a Sasquatch. I mean,
it had to be a Sasquatch. It's got to be bipedal.
Or an animal on two, like, but who says in a emergency situation, like, I don't know, but it was bipedal. Someone went to science class.
I was ahead of my time.
Good work.
Yep. So Rex saw Sasquatch that night, and we heard it all night, and he never went away. And I don't think I've ever been back to City of the Rocks because that scared me.
Yeah, I'm not sure. My family's even had family reunions up there, and I'm not sure I've been back to City of the Rocks either.
Rex like, I'm getting a hotel.
Yeah. I don't think we've been back.
So that is the story of Sasquatch and why Sasquatch is integrated into our lives, Rex.
Yep, and now into yours.
In the bipedal, and now into yours through the Pines podcast. And as we wrap here, I just want to say my favorite episode 11, 75 years of wealth building, because it combined Rex, yourself, Brandyn, who was new on the podcast, and then also Dan, who was on for a couple of episodes, who was getting ready to retire, but had so much experience that it added up to 75 years worth of experience in one episode. And that's episode 11. And that was a really fun episode. And so you can go back and listen to that one. I also really enjoyed episodes 91 and 90, where we had the Hartford on, the Freedom Paradox, and Family Money Talks. Unfortunately, Family Money Talks is only on YouTube because I forgot to upload that one to the podcast only. So I'll do that one this afternoon or this weekend, and then backdate it so it sits appropriately. But those Hartford ones were good.
Yeah, all three of those were favorites of mine as well. The one with Dan, I loved, talking with the 75 years of experience, just being able to sit here with him and be able to pick his brain. And he has such a different perspective on raising kids and money and clients, because he had been in management in the financial services industry for the vast majority of his 40 years in the business. And so not only did he have him and his own clients' experience, but he knew most of the financial advisors in the entire state of Utah. And they would share war stories, and they would share kind of methodologies and talks. And so he was just is still a wealth of knowledge. Yeah. And so Dan and I are still really, really close. Matter of fact, I probably will see him this weekend. But
and we had a number of podcasts with Dan. I mean, Dan did quite a few, and it was fun. He had 40 plus years. Yeah. It was fun.
Yep. It was good. That was definitely favorite. And the Hartford ones were fantastic too, especially because the reason I like the Hartford ones is it takes a step back and really tries to focus on what is important. It really, it's really not important if you get, 9% return versus 9.2, right? But what really is important is, once you retire, who are you going to go and eat your ice cream with, right? And who's going to help you change your light bulbs? And where's your social circle going to be? Because most people, their entire upbringing in life, their social circle revolves around their work. And when you retire, you lose that social circle. And we see a lot of people regress very rapidly in retirement because they aren't able to replace that part of their life. And so I loved the Hartford series for that, is it kind of brings to light some of those issues that people face.
And if you're in your 30s and 40s, you're probably not thinking about that at all, but your social circle is super important, and that's a good time to start that. So,
well, and your parents are thinking about it. So maybe you can help your parents get involved in different activities. So
it's been a good run, guys, and we're going to keep it going. So 100 episodes, and we're going to record 101 here right after this. So thanks so much, Rex. And Brandon, for your input and your time over these last 6.5 years. Appreciate it.
Yeah, thanks, guys. It's been fun.
Yeah. If you had found any value, which I'm sure you did in just the Sasquatch story alone, you can consider supporting us at buymeacoffee.com/Banyan Media. That's BANYAN Media. You can subscribe to us on YouTube at Through the Pines, where you can see our wonderful, beautiful faces, and us stuffing them with our s'mores Pop-Tarts today.
Yeah, that was delicious.
Thank you to those of you who follow us on Facebook and Instagram at Pines Podcast. This has been our 100th episode of Through the Pines, reminding you to use yesterday's dollars to finance tomorrow's dreams.